Welcome to the Radio Revenue Podcast.
It's fantastic to be here for this one.
Yeah, today is Sunday, February 22, 2026. And I have to be honest with you. When we decided to dedicate this deep dive to a manufacturing company, my first instinct was to reach for a second cup of coffee.
A very strong cup, I imagine.
Extremely strong. Because let's face it, when you think manufacturing, you usually think big, dusty factories, slow growth rust belts, maybe just a little boring.
Right, that is the stereotype for sure. But you definitely need to clear your mind of the smokestacks for this.
So throw that out the window.
Completely out the window. If you are picturing the 20th century, you are looking at the wrong company. We are diving into AMETEK Inc. today, ticker symbol AME.
And looking back at their 2025 fiscal year, boring is just the absolute last word I would use.
It really is. This is a company that has quietly positioned itself to power everything from the sensor inside a jet engine to life-saving devices in an emergency room. And what blows my mind is that they are doing this while flying completely under the radar. Like, I don't think I have a single thing with an AMETEK logo in my house. I check my toaster, I check my car.
Nothing right.
Nothing at all.
You probably don't see the logo, but the companies you buy from, they absolutely cannot function without AMETEK. That is their hidden giant status.
A hidden giant. I like that.
And 2025 was a headline year for them. They didn't just make things, they went on a massive shopping spree.
Huge.
We are talking about nearly $1 billion spent acquiring other companies in a single year.
$1 billion. That is a serious war chest. So our mission today for this deep dive is pretty clear. We need to figure out how a company that makes parts.
Hidden parts at that.
Exactly, hidden parts.
Yeah.
How they generate enough cash to spend $1 billion buying their neighbors. We need to unpack this thing they call the AMETEK growth model.
Which I know sounds like total corporate bingo.
It really does. It sounds like something you put on a PowerPoint to impress the board.
But looking at the numbers in this 10K, it actually seems to be working.
It's definitely working. I mean, for the fiscal year 2025, they posted record sales of $7.4 billion.
And record net income of $1.48 billion.
Right. So this isn't just a strategy on a whiteboard. It is a machine that is printing money.
Absolutely.
Okay, $7.4 billion in sales. That is a massive number. But sales of what exactly? Because I looked at their catalog before we started recording, and I honestly got whiplash.
It's a lot to take in.
1 minute I'm looking at a motor for a surgical tool. The next I'm looking at a heat exchanger for a fighter jet, and then powdered metals. Is there any logic to this, or are they just making whatever they can sell?
It does look like a junk drawer at first glance, doesn't it? Like a garage sale of high-tech parts.
Exactly.
But there is actually a very strict architecture here. If you strip away the thousands of individual product codes, AMETEK is really just two massive engines running side by side.
Okay, let's pop the hood then. What are the two engines?
The first one and the heavyweight of the pair is the Electronic Instruments Group, or EIG.
EIG.
Right. Think of this engine as the brains of the operation.
The brains. So this is like the software, the thinking parts.
Close. It's the sensing, monitoring, and analyzing parts. EIG is all about high-tech precision. We aren't talking about a thermometer you put in your mouth. We are talking about advanced analytical test and measurement instruments.
Give me a real-world example. Where does this stuff actually live?
Okay, imagine a massive data center, the kind running the AI models everyone talks about.
Sure.
EIG makes the instruments that monitor the power quality to ensure those servers don't crash.
Oh.
Or take aerospace. They make the sensors that sit inside a jet engine, surviving temperatures that would melt a normal computer just to tell the pilot the engine is healthy.
That's intense.
Or even in pharmaceutical manufacturing, checking for microscopic impurities.
So high stakes, high precision. If these parts fail, planes fall out of the sky or hospitals go dark.
Exactly. And because the stakes are high, the margins are usually high too. EIG is the financial driver here.
How big of a driver?
In 2025, this group brought in $4.9 billion in sales. That is about 70% of AMETEK's total revenue.
Wow. So 7 out of every $10 comes from the brains.
Yeah.
AMETEK is basically a precision instrument company disguised as a general manufacturer.
That is a very fair assessment. And it's a global brain, too. The 2025 report highlights that 52% of EIG's sales came from outside the United States. They are exporting this high-tech capability everywhere.
Okay, so if EIG is the brains, and that's 70% of the business, what is the other 30%?
That brings us to the second engine, EMG.
Right.
the electromechanical group.
EMG.
Right. If EIG is the brains, EMG is the muscle.
The muscle, I assume this is where the heavy lifting happens.
In a way, yes. It's about precision motion and thermal management. We're talking about moving things, cooling things, and connecting things. But again, I want to be clear, this isn't a generic motor for a ceiling fan you buy at a hardware store.
Right. We aren't talking about commodity parts here.
No, definitely not. These are highly engineered motors for medical devices where precision is literally life or death.
Like a surgical robot.
Exactly. The motor that moves the scalpel has to be perfect. Or think about heat exchangers that keep defense aircraft systems from overheating during combat maneuvers.
And you mentioned powdered metals earlier. Does that fit in here?
It does. It's a specialty metal division. They make high-purity metal powders used in medical implants and aerospace components. It's incredibly niche.
See, that word niche, I feel like that is the key code to unlocking this whole company.
It really is.
Because as you describe these products, the sensors for jets, the surgical motors, I am realizing I can't just go to Home Depot and buy a replacement part.
That is the aha moment right there. You nailed it. The 10K report explicitly states that their strategy is to target niche markets.
They don't want to compete with the giants.
Right. They do not want to compete with GE or Siemens on mass market commodities where the lowest price wins. They want to be the only game in town for a very specific, hard-to-make part.
So they aren't trying to be everything to everyone. They want to be the essential thing to a few people.
Precisely. If you are an aerospace engineer designing a fuel system, and AMETEK holds the patent on the only sensor that works at that specific temperature, you aren't shopping around for a better price.
You just pay what they ask.
You pay AMETEK what they ask. That gives them incredible pricing power.
Which explains the record net income. But let's pivot to the how. We mentioned the AMETEK growth model at the top of the show.
Yes, the famous growth model.
Usually when a company talks about a growth model, it's just a lot of marketing fluff.
Yeah.
But you said this is a disciplined system. Break it down for me. What are the pillars holding this up?
It's a four-pillared strategy, and they follow it religiously. It's almost like an internal religion at the company. The first pillar is operational excellence.
Which sounds like standard corporate speak for doing a good job.
It does, but for them it means Kaizen and lean manufacturing.
Kaizen. That's the Japanese philosophy of continuous improvement, right?
Correct. It's not just about working harder. It's about constantly tweaking the process to cut waste. It's unglamorous, gritty work on the factory floor to shorten lead times and squeeze every drop of profit out of $1 of sales. They are completely obsessed with efficiency.
So pillar one is be ruthlessly efficient, save every penny. What's pillar two?
Pillar two is strategic acquisitions, buying other companies. This is the sexy part of the business, and frankly, it's how they scale.
Right. They use the cash from pillar one to fuel pillar two.
Exactly.
We are going to do a deep dive on that shopping spree in a minute because those numbers are wild. What are the last two pillars?
Pillar three is global and market expansion. They aren't content sitting in Pennsylvania waiting for the phone to ring. They are aggressively pushing into emerging markets and expanding their sales footprint globally.
Makes sense. And the fourth?
Pillar four is new product development, basically R&D.
Because you can't sell the same sensor forever. Eventually, the competition catches up.
Exactly. In 2025, they spent $382.8 million on research, development, and engineering.
Nearly $400 million.
Yeah, just to stay ahead of the curve. They have to innovate to keep those niche markets from finding a new supplier.
That is a serious commitment to the future. But I want to circle back to a financial term I saw in the report that seems kind of contradictory.
Okay, what's that?
They describe themselves as having an asset-light business model. Now, you just told me they make motors and metal powders. How do you manufacture heavy industrial stuff and be asset-light?
It's a great question, and it's really the secret sauce of their cash flow. Asset-light in this context doesn't mean they don't own factories.
Okay.
It means they structure their business so they aren't pouring all their capital into massive, heavy infrastructure, like blast furnaces or giant foundries that take decades to pay off.
So they aren't building the Hoover Dam, they're doing assembly and high-tech engineering.
Exactly. Their manufacturing is flexible, it's assembly, it's calibration, it's testing. Because they aren't spending every dollar of profit just to maintain giant rusting machinery, that cash is free to be used elsewhere.
And the numbers actually show that.
They certainly do. In 2025, AMETEK generated $1.8 billion in operating cash flow.
Oh.
That is an enormous amount of liquidity for a company of this size.
So let me get this straight. They use the niche strategy to charge high prices. They use operational excellence to keep costs low. And because they are asset light, they don't have to spend that profit on fixing machines.
You got it. And that leaves them with a huge pile of cash, 1.8 billion of it, burning a hole in their pocket.
Which brings us to the main event of 2025, the shopping spree.
The shopping spree indeed.
The report says they spent $933.2 million in cash to buy two major businesses. That is almost $1 billion out the door. Now, I'm assuming they aren't just buying random profitable businesses. They aren't buying a fast food chain or a clothing brand just because they have the cash.
No, absolutely not. They are highly disciplined. They are looking for adjacent markets. They want companies that look and smell like AMETEK. High-tech niche differentiating.
Right.
The first purchase in January 2025 was a company called Kern.
Kern sounds German.
It is. They specialize in high-precision machining and optical inspection.
So machines that make other machines.
Essentially, yes. It fits perfectly into that ultra-precision technologies bucket within the EIG group we talked about. It's high accuracy, high value. But that was just the appetizer.
Okay, so what was the main course? Because $1 billion is a lot of money to spend.
The big fish came in July 2025. They acquired Ferrero Technologies.
No, I feel like I've seen that name.
You likely have. They are a leader in 3D measurement and imaging. They make these incredible portable laser scanners and trackers.
Oh, I know what you're talking about. These are the devices that can scan a room or a complex part and create a perfect 3D digital model on a computer screen.
Exactly. It's used in manufacturing for quality control, like comparing a physical part to the digital blueprint, but also in construction and even crime scene analysis. The acquisition brought in what they call digital reality solutions.
Digital reality. That sounds a lot more futuristic than motors and pumps. It feels like a bit of a pivot.
It is a strategic expansion. Ferrero had annual sales of about $340 million. So this wasn't a small tuck-in acquisition.
Right, that's huge.
This was a major addition to the brains engine. It tells us AMETEK sees the future of manufacturing as being digital integrated and verified by lasers.
So they are buying the technology that their customers need to inspect the parts that AMETEK is already selling them. It bundles perfectly together.
It deepens the moat. If you are a customer, AMETEK is now providing the part and the verification system.
But here is where I have to play the skeptic for a second. Integrating one company is hard. Integrating two in a year is harder. And looking at the data since 2021, they have bought 15 companies.
Yes, they have.
That is 3 a year, every year for 5 years. That sounds like a recipe for absolute indigestion.
It is a valid concern. When you buy a company, you aren't just buying their patents. You are buying their culture, their messy email servers, their HR problems.
Exactly. 15 different IT systems, 15 different ways of doing payroll. How do they not collapse under that complexity?
This goes back to that first pillar, operational excellence. They have a dedicated integration machine. They buy a company, and they immediately plug it into the AMETEK network.
Just strip it down.
They strip out the inefficiencies, the duplicate HR, the redundant back office costs, and they apply that Kaizen philosophy to boost margins. They're essentially flipping houses, but instead of selling them, they keep them and rent them out for higher rates.
And they aren't slowing down, are they? I saw a subsequent event note in the report. Even after the books closed on 2025, they were back at the store.
That's right. In January 2026, just last month, they acquired LKC Technologies.
What do they do?
Ophthalmic technology, eye care.
Wait, so we went from precision German machining to 3D lasers to eye doctors.
It sounds random, but think about it through the AMETEK filter. Is it high precision?
Yes.
Is it a medical application?
Yes.
Is it a niche market?
Yes. Okay, I see the pattern.
It fits the EIG profile perfectly.
It's not about the industry, it's about the characteristics of the business.
Exactly.
But let's look at the flip side here. You can be the best integrator in the world, but you can't control the outside world. Running a global empire with nearly half your sales international has to come with headaches. What is keeping the CEO awake at night?
You are right to ask. The 10K risk factor section highlights a few things, but the big one for 2025 was trade.
Tariffs?
Tariffs. The report explicitly mentions that in 2025, the U.S. government announced additional tariffs and trade restrictions.
Which feels very relevant. If you are moving parts between Germany, China, and the U.S., a tariff war is a direct hit to your margins.
It is. Now, AMETEK says the 2025 modifications didn't materially impact their results yet.
Yep.
Right? But they are proactive. They're adjusting pricing to pass those costs on to customers, which they can do because, remember, they have that niche pricing power.
Right. If you are the only one selling the sensor, you can just charge 10% more. The customer really has no choice.
Exactly. But more importantly, they are leveraging their worldwide manufacturing footprint. If the U.S. puts a tariff on Chinese goods, AMETEK can shift production to their factory in Mexico or Serbia.
Oh, wow.
They can shuffle the deck chairs to avoid the waves. But that takes massive logistical coordination.
It sounds like a high-stakes game of whack-a-mole.
It is. And there is another risk that stood out to me, and it connects directly to that acquisition strategy we just talked about.
What's that?
Cybersecurity.
Everyone is worried about hackers, but why is AMETEK specifically vulnerable?
Think about what we just said. 15 acquisitions in 5 years. That is 15 new front doors for a hacker to try and open. When you buy a company, you inherit their cybersecurity weaknesses.
That is a great point. You might have a digital fortress at HQ, but if you buy a company that has the digital equivalent of a screen door,
you are fully exposed. The report notes the sophistication of cyber attacks is increasing, specifically mentioning artificial intelligence as a threat vector.
Makes sense.
They've set up a dedicated cybersecurity steering committee and are following the NIST framework to lock things down. But managing the security of a patchwork empire is incredibly difficult.
That is the hidden cost of growth. You buy the assets, you buy the threats. So we have the growth engine firing on all cylinders, but we have trade wars and AI hackers at the gates. Let's break down to the bottom line. If I am a shareholder sitting here in February 2026, looking back at 2025, am I happy?
You are very happy. Let's run the scorecard.
Hit me with the numbers.
Sales. Record segment $0.4 billion, up 6.6%.
Check.
Earnings per share, or EPS. Record $6.40, up 7.9%.
Check.
And here's the number that tells you about the future. Backlog. They ended the year with a record $3.58 billion in backlog.
Explain backlog for the listener who might not be an accountant. Why does that matter?
A backlog is basically orders they have received signed contracts for, but haven't built or shipped yet. It is guaranteed future revenue. Having $3.58 billion in the queue means they have incredible visibility into 2026. They aren't guessing if the phone is going to ring. The work is already on the desk.
That is a huge safety net. Now, usually companies with this much cash do one of two things. They hoard it or they give it back. What is AMETEK doing?
They are giving it back. They paid out $285 million in dividends in 2025. And just recently, in February 2026, the board raised the dividend by 10% to 34 cents per share.
A 10% raise is nothing to sneeze at. That beats inflation.
And they didn't stop there. They also brought back $443 million worth of their own stock in 2025.
Stock buybacks. That's when the company buys its own shares to reduce the count, making my slice of the pie slightly bigger, right?
Correct. It's a way to systematically boost earnings per share, and they are doubling down on that strategy. In February 2025, the board authorized a new $1.25 billion share repurchase program, replacing the old one.
$1.25 billion authorized. That is a massive signal of confidence. It says management thinks their own stock is the best thing they can buy right now.
Or at least they believe that investing in themselves, either through M&A or buybacks, is the best use of that $1.8 billion cash flow. They are returning value to shareholders through every available pipe.
So when we zoom out, we see a machine. It sucks in cash through niche dominance and asset-light operations, and it blasts out growth through acquisitions and shareholder returns. It sounds almost too perfect. Is there a catch?
There is a lingering question. I call it the Goldilocks problem.
The Goldilocks problem.
Think about it. AMETEK's entire model relies on finding these perfect companies to buy. They need companies that are technologically superior leaders in a niche market, culturally compatible, and for sale at a reasonable price.
And they found 15 of them in 5 years.
Right. But the supply of perfect companies isn't infinite.
Very true.
The provocative thought for you to consider is this. How long can they keep finding these hidden gems? As AMETEK gets bigger, they need bigger acquisitions to move the needle, like the Ferrero deal. But there aren't that many Ferreros out there.
So the danger is that they run out of just right companies and start buying too big or too messy companies just to keep the growth streak alive.
That is the trap of being a serial acquirer. You have to keep feeding the beast. If the quality of the food goes down, the health of the beast suffers. Watching how they navigate that balance in 2026 is going to be the real story.
Well, with a record backlog and $1 billion in the bank, they certainly have the runway to try. It's going to be fascinating to see if they can keep the streak alive.
Absolutely. It's a masterclass in industrial strategy.
And that brings us to the end of this deep dive into AMETEK's 2025. It was a Revenue Radio podcast. Thank you for watching. Please like, subscribe, and hit the bell to stay updated with our latest analyses.